All right, sales of new U.S. single-family homes rise slightly in February, indicating some home buyers are coming off the sidelines. However, home builders signaling caution on demand as Americans continue to sour on the U.S. economic outlook and face affordability concerns. Here with how to play the housing sector, we have Wedbush Securities SVP of Equity Research. That would be Jay McCanless. Jay, always good to see you, to have you on the show. You know, we did get a read today, Jay, on another read on consumer confidence. Not good, Jay. It was tumbling just as we head here into the all-important spring home buying season. So I'm just curious, Jay, let's start there. Get your take on this U.S. housing market, Jay, and how you see it evolving over 2025.
Sure. And thanks for having me on. Yeah, the confidence numbers didn't look great. So far the job numbers have held up okay. That's if there's anything we're kind of watching, we don't have formal forecasts on it, but you have to have a job to get a house. And so, we'll see all the stuff that's happening in Washington and other places with the job cuts. We're kind of keeping an eye on that too. But I think, and we wrote about this in our KB note last night, for the builders that are willing to maybe cut a little bit of price and change up the incentive mix, there is demand out there. KB, we talked about had a better exit rate in terms of their monthly order pace than what they had for the full quarter after they made those tweaks. And I think even with what we heard from Lennar last week, their numbers were below what we were expecting. But again, in their case, I think they were willing to move some price around to get homes sold. The names that we like in the group are mostly geared towards move up and luxury buyers who maybe are not completely independent of what's going on with rates, but maybe a little more payment insensitive than some of the entry-level buyers. So the names we like on the large cap side are Toll Brothers and Pulte. And then on the mid cap, we like Taylor Morrison and a company called MI Homes that's a builder out of Columbus.
And Jay, are we not seeing some of those same, pulling of levers and margin pressures potentially on that upper end as we're seeing with, say, KB or Lennar?
We have, because I think even some of the higher end customers, they still want to get a mortgage rate buy down, and that has become for many builders the biggest incentive that they're using right now. Names like Toll and Pulte don't have to use as much of those, but they have to do some. I think it's just the builders kind of opened themselves up to this when they started doing rate buy downs 2-3 years ago, and now it seems to have spread across the industry. So you have that as a concern. I think the other thing we've been talking about is rising lumber prices. Lumber prices have been up year on year for 7 weeks in a row now. And who knows what's going to happen with the tariffs. If we do put more tariffs on Canadian lumber, that could be a gross margin and an EPS headwind for the back half of the year. It wouldn't be immediate, but the homes that the builders are selling now and then would be constructing later in the year, we could potentially see some gross margin pressure from that.
So that's interesting, because I was going to ask you just about policy risk, policy concerns. We can talk about tariffs. Of course, there's immigration concerns as well. I mean, when you're speaking to these builders, you're listening to them, how top of mind are these policy risks and concerns for them? And is there any sign yet of meaningful disruptions on those fronts?
So I think the lumber tariff issue has been top of mind for a month plus, but besides, again, we've seen framing lumber prices move up, but not nearly as dramatically as I think they potentially could move if the tariffs are put in. And I think every builder earnings conference call we've had last 6 weeks, 2 months, we've asked, or one of our competitors has asked about, are we seeing type of potential deportation issues, people missing off the job site? And so far, it does not seem to be happening. Can't rule it out in the future, but at this point, the builders and their subcontractors are not reporting any issues with, ICE raids or people not showing up for work, things like that. It seems like, if the builders can get a contract right now, the subs can get the homes built in a pretty timely fashion, but certainly something we're keeping on the radar.
Jay, let's zero in on the lower end, the Taylor Morrisons of the world. And again, help me understand why they are better positioned in this environment that still have a lot of these cross currents that we've been discussing, whether it is the tariffs, rates, consumer confidence, et cetera.
Sure. And Taylor Morrison if you look at their business mix, we think they're about a third entry level, a third active adult, and a third move up. So when you have roughly 2/3 of your sales going to active adult buyers who probably are getting a very small mortgage or paying cash, and then the move up side where those people are selling a home to buy a Taylor Morrison home, gives me a little more confidence that they can hit their numbers and hit the numbers that we projected for them. But yeah, on the entry level, it's a real fight right now. The second largest builder in the country, which is Lennar, has been very aggressive in selling for what we call pace over price, and I think putting some downward margin pressure on the rest of the entry level home builders. Don't really see that ending anytime soon, especially if we don't get any help on mortgage rates, which we've been somewhat right in our call that rates would move lower this year, but it's only about 25 basis points on mortgage rates being down. So not the kind of help we were hoping to see from the mortgage market. But if we do see some improvement in rates, i.e. lower rates, that would certainly, I think the demand, as we talked about with KB, the demand's out there. I think we just have to give the consumer, especially the entry level consumer, a little more help on the affordability front.
Jay, always good to see you. Appreciate your time and those stock picks.
Thank you.